All right, folks, welcome back. This is episode number 8, applying institutional order flow to Forex markets. All right, folks, welcome back. Taking a look at TradingView, and I promise this is going to be a really short one tonight. Let's go to Euro. And whenever I'm looking at data from TradingView, this is the data feed I use for Forex pairs only, Forex.com. I don't want to use OAN though. Definitely not them. Alright, so we have the daily chart up for Euro Yen. Just so you know, I hate yen pairs. I can't stand them. But for the sake of completeness, this is how you would look for these types of patterns in Forex. Now, I have lots of feedback in the comments section that you don't get to see, but it's really just for me. I get a lot of requests whether or not this is appropriate to be using for higher time frame charts, and I think daily charts are what everybody classifies as a higher time frame chart. So I want you to take a look at this chart before I do any mock-up on it. Pause the video if you're not ready. Still don't pause it, do you? Alright, take a look at the relative equal lows over. You see that? It's going to go quick and dirty tonight. Riding dirty. Alright, so we have relative equal lows marked out over here. The market has traded down through and created a run higher. Now here is why I do not like the yen pairs. Okay, I get questioned all the time. Why don't you like yen pairs, ICT? They move around nice. They do this, they do that. They tend to have like a double return to a specific level I like to see. And you're going to see it right here. Okay, swing high. The market rallies through that. There's no fair value gap there. It drops back down in. Then it runs again, taking out this swing high. So we have 2 points of market structure that have moved to the upside. In other words, price is traded above it. Now this leg here, you want to go back through that and see, is there a fair value gap? Well, we have 1 and 2. The market trades down into it here, sends it higher. What's above here? Buy side liquidity. This old high back here could be a draw on liquidity as well. So there's going to be buy stops. Whether it trades there or not, it's irrelevant. Okay, it's likely to draw to it. Just like, playing horseshoes. You ever played the game horseshoes? Not every single time you throw a horseshoe is it going to go on that post, but it's still fun to play, right? So you're aiming at that post, whether you hit that post or not. And this would be the post in the game. Playing horseshoes, you're just aiming for it. Now, obviously, we started trading a new day here, but this candle, which was the 10th of February, 2022, this daily candle, we could trust that this was likely to go higher because we went up, we've consolidated, and then start another run into this high here. Again, whether it trades through it or not, it's irrelevant, okay? Because even a failure swing to get above old highs, if there's enough range from being right here at the open to reaching up to here, that's enough to take a stab at it and to see if you're going to get any kind of yield. So that's an example of it occurring on a daily chart. But I want to go into this very day right there, okay, the 10th. So we're going to drop down into a 15-minute time frame. All right, here's the 15-minute time frame, and we're going to mark up our chart. Midnight New York time. Market rallies in here. Yeah. And then we go into the New York session right here. So we're going to go into this price structure and ferret out the run that occurred in here. So I'm going to put a rectangle in this area so that way we know what we're looking at relative to this 15-minute time frame. You guys ask why I do PowerPoint slides. This is the reason why. Makes it a lot easier to go right to what I'm looking for. All right, we're going to drop down to a 5-minute chart. Okay, and if you take a look at $7 o'clock in the morning, 10 o'clock in the morning, that's your New York ICT kill zone. Okay, that's the time of day that New York session trades form. I have more information in that regard for time of day for Forex in this channel. There's lots of videos, lots of topics and things you can explore. I don't want to beat it to death because I've already done it in other places, but just know that 7 o'clock in the morning to 10 o'clock in the morning, New York time, again, on TradingView, you need to have it toggled to that. Everything else, it'll be wrong. All right, so here is the time of day that the forming of a New York setup forms. All right, so we have the market trading down, takes out a swing low, trades down below that, and then punches higher, right above this swing high. Inside this price leg right here, is there a fair value gap? We're going to start breaking it down top down from 5-minute, top down. We're going to break it down from the 5-minute down to the 1-minute chart. So from this low up to this high, right in there, that's what we're going to study on each new time frame. So we'll go down to 3-minute. Okay, so in this price leg here, do we take out a swing low? Yes. We trade down below a swing low. Does it take out a swing high here? Yes, it does. So now we have a valid condition to see if there's a trade. Go back through this price leg. Is there a fair value gap? Right in here. And this one here. So remember I was teaching you, it could stab down there. Just be mindful of that. But try to get your entry in on that one there. And that's what we have here. It trades down to it there. Now, the question is going to be is how far will it trade to? Because we're not looking at anything over here like it's a middle of the range type idea. So for expansion type moves, practical lesson tonight, where if we don't have a range to trade inside of, how do we anticipate how far it can trade up or trade down? In this case, we're looking for a long. Where would our targets be? Because the old high is over here. Now, I'm sure if we went to a hard time frame, keep looking to the left, we'll find something. But a real easy way is to take your price leg over here. See this swing low right prior to this run up? Then we consolidated, dropped down, created a discount, and then created our retracement rally and start to run up into these highs. How can we know? Well, I like to take a fib. Anchor it. Don't let go of mine. And anchor it to a previous swing. Okay, so from this low to this high, after we leave this consolidation and start to trade higher, standard deviation -1, and I got a lot of questions. You know, what's my setup for my fib? I actually show that on the OTE primer video, so you're welcome to go take a look at that on the YouTube channel as well. 133.153 and that's not that. Let's see. High is 133.15 and 3. So right to the point that you'd be looking for. And then we've seen it recede from that. Okay. So obviously when I show an example like this, it makes me want to trade the yen. But I hate this pair. I can't stand. There's other markets that can scratch my itch for Forex, but this one is not one I like to trade. But I wanted to come out tonight and kind of give you a quick view of what you could do with these markets using the model. Okay, There is a approach that you can use with the London session. Okay, and London would be marking up your vertical lines relative to New York local time, 2 o'clock in the morning to 5 a.m. So you'd have your bracket. So your operating hours would be hunting the setup for New York between 7 o'clock in the morning and 10 o'clock local New York time. For London session trades, you would look for setups that would provide you a way to trade a fair value gap between 2 o'clock in the morning and 5 o'clock in the morning. Okay, and that's as easy as I can make it for you. It's simple, and any additional information you would want to have, I have absolutely covered it in other videos in this YouTube channel. Okay, so it's predominantly a Forex channel, and it's only been recently with the 2022 mentorship I'm talking and teaching about the stock indices. So I got a lot of requests for Forex, so here you go. It's simply applying what you've been trained with the futures indices, but just applying it to the Forex market, but applying it to the time of day relative to New York or London. And yes, you can take trades in Asia. Yes, you can take trades in London close, but I'd prefer to have you just trade on these two time frames here, or time of day rather, being New York open, which is what's being shown here, 7 o'clock in the morning to 10 o'clock in the morning. New York local time, again, always, I can't say it enough, because if you don't do this and you just have it set to your local time, it won't work. But it's New York local time on TradingView, 7 o'clock to 10 o'clock. This is the time when you're hunting the setup. Okay, so in summary, we can anticipate this market going higher. Why? Because the euro dollar is going higher. You can also check it by going to, let's go to a daily chart first. And you can go to 6E, which is Euro futures. And we'll just use the front month continuous. Okay, you can see how Euro, where's it been going? So has it been going lower or higher? Clearly going higher. What has the yen been doing? So when you look at Forex pairs, you want to look for that relationship between the instruments that make up your pair. So euro-yen, euro is strong, yen is weak. So what would that mean for euro-yen? It would mean that if your bias is bullish and you have this underpinning between euro and yen, this is going to make this pair go higher. And it's a real simple way of looking at how to determine these exotic crosses, okay, and how to frame the logic behind whether it should go higher or lower. And then apply time of day, wait for the pattern I'm teaching you, and you won't need to do anything else. You don't need to buy a subscription to anybody's services. You don't need to learn anything else. You don't have to buy any courses. It's all right here for free, and it works. Until I talk to you next week, enjoy your weekend and be safe.